In this first lesson of the VITA Basic Tax Law course, we will be covering some filing basics. What forms, who files these forms, and who are they really? Because we need to know to do our job correctly. First, let's take a look at the 1040 form. This is where individuals report their income. Now you might notice that there's a watermark on this form. That is because this is a draft. At the time of this recording, the final form has not yet been released. When you download a draft form from the IRS website, there's a page before it that explains that this is most likely what the form will look like, but that it could change due to an unexpected issue or new legislation. Being flexible is just part of working in tax. Sometimes changes to tax law happen right up into the tax season, and that's okay. I like to think of it like a house. You might redo the carpets or replace the siding from time to time, but only rarely remove a load-bearing wall. The structure stays fairly consistent over time. And here in our zoomed out view, we are going to look at the overall structure of the form. This first section is for basic information about the taxpayer. The second section is for filing status, and we'll learn more about that in our next lesson. But as a preview, some of the more common ones that you might be familiar with are married filing jointly, single, and head of household. The next section has a question regarding digital asset transactions. It is important to note that any transaction other than purchasing digital assets using cash would result in marking that box yes. These situations are out of scope for our program. This section also has some other questions that help determine the taxpayer's standard deduction amount, which we'll discuss again later. The next section is for dependents. Dependents are people whom the taxpayer supported and most likely lived with. We will learn more about the tests to see if someone can be claimed as a dependent again in a later lesson. Then we come to the income section. Here we can see the structure that we saw from the intake form start to take shape. This mirrors the structure of our tax system. We collect all sources of income, and then we can make adjustments and deductions from that income, our intake form just calls them expenses, to lower the amount of income that will be subject to tax. Importantly, in between those adjustments and deductions, there's this really important line. So important that we often refer to it as the line and say things were above the line or below the line. This line is adjusted gross income. Adjusted gross income in many cases determines whether a taxpayer can qualify for certain tax benefits and for how much. So after we make our adjustments and deductions, page 1 ends with taxable income. Page 2 of the 1040 begins with tax. Now we spent all of page 1 determining our taxable income, and that's our tax base. So then page 2, the first line is tax from the table. And there are some tables that the IRS publishes that help you determine based on your taxable income what your tax should be. Then there's another line for things like alternative minimum tax. That is out of scope for us, so we don't need to worry a lot about it right now, but just so you know why there's another line. The next section is for non-refundable credits and other taxes. Now, credits lower the amount of tax that you would owe. Non-refundable credits can lower the amount of tax you owe to 0, but they cannot give you any money back if your tax amount is 0. Then there are other taxes, things like self-employment tax, that might need to be added back into your tax. So then you get to the line total tax. After that, you get to figure out what your prepayments were. And this is like when your employer was taking money out of your paycheck as you went. This is where you would put those amounts. Then There are refundable credits, and these are amounts that, like the non-refundable credits, get to lower the amount of tax, but unlike non-refundable credits, if your tax amount is 0, you still get that money back. So after all of these calculations, you've figured out your total tax, and you've subtracted the prepayments that you made, and you've subtracted the refundable credits, and you might be getting a refund, or you might owe some tax at the end of the year and need to pay. Our last section is just signatures and stuff. You have signatures for the taxpayers. You have signatures if somebody else is going to be in contact with the IRS for the taxpayer, and a section for paid preparers. And just so you're aware, as volunteers, VITA volunteers, we are not paid preparers. So that covers our page 1 and page 2, a zoomed out view of our 1040. It is important to know, though, that page 1 and page 2 of the 1040 are not all there is. There are several lines that refer to other schedules. We have 3 main schedules: Schedule 1, Schedule 2, and Schedule 3. Schedule 1 covers additional income and adjustments to income. Schedule 2 covers additional taxes, and Schedule 3 covers additional credits and payments. And just to note that each one of these schedules is 2 pages. So I'm only showing you here the front page, but there is another page. And here you can see that the schedules continue. Now that we've gone through our 1, 2, 3s, it's time for the ABCs. So we have A for things that are itemized deductions, B, interest and ordinary dividends, C is for profit or loss from a sole proprietorship type business, D would be for capital gains and losses. Schedule E is commonly rent and royalties. F is for farming. H is for household employment taxes. J, income averaging farmers and fishermen. R is credit for the elderly or disabled. SE is self-employment tax. EIC is earned income credit, and 8812 is the child tax credit and additional child tax credit. Now, these are not to overwhelm you so much as to give you awareness of what is out there and the kinds of things that can be on a return. Many of these, for instance, Schedule H, are out of our scope, and so we're not concerned with learning about them right now. A couple of the ones that you will see are Schedule EIC for Earned Income Credit and Schedule 8812, the Child Tax Credit and Additional Child Tax Credit. And we will cover those schedules when we cover that topic in a later lesson. After we've sat down with our clients and said things like, "Hi, how are you and how's the weather?" the first thing we need to figure out is whether this person is required to file. And there are 3 main drivers of this: filing status, age, and gross income. Chart A from the IRS Publication 4012, Tab A, can help us determine this. Because we are getting an early start, VITA has not yet updated their materials. So you can see that I've crossed out the amounts in the 3rd column. Those are last year's numbers. I've updated the numbers for the coming tax year in the table to the right. Every year, usually mid-fall, the IRS publishes a revenue procedure, or RevProc, that gives inflation-adjusted amounts for things like standard deductions for the following year, so maybe a year and a half before the filing deadline. On the left, you can see the revenue procedure where I got this year's numbers. In general, the filing requirement is the standard deduction. If a taxpayer's income is less than the standard deduction, their taxable income will be 0, so they are not required to file a return. One exception is for married filing separately status, as you can see on this chart. Special circumstances might cause a person to have a different filing requirement. These might be dependents who have unearned income, such as interest or investment income, or self-employed persons. There are also some recapture or other taxes that may cause a different filing requirement. Unlike dependents and self-employment, many of these are out of scope for VITA. Publication 4012 lists a lot of these other filing requirements in Tab A, Charts B and C. There is another group of people who are not required to file a return, but who should file anyway. They might have had taxes withheld from their income that entitles them to a refund, or they might qualify for certain credits that could get them money back, such as the Earned Income Credit. Some of our clients might be receiving financial assistance from other organizations. Those organizations might require proof of income, in which case the easiest way to generate that proof is to file an income tax return. Another benefit of filing is identity protection. As we discussed before, when the IRS receives a second tax return using the same tax identification number, it will reject the second return. In this way, the taxpayer prevents the filing of any fraudulent returns later for that same tax year. These and more reasons can be found on Chart D of Publication 4012 in Tab A. As you'll recall from our intake interview and quality review course, we will be verifying identity before we start a return. This includes photo identification for every taxpayer or taxpayers if they are filing jointly. We also need to see a valid tax ID for everyone on the return, so that includes taxpayers and any dependents. Valid IDs include Social Security number. That can be verified using a card, a Social Security Administration letter, or Form 1099 SSA, which reports Social Security income for the year. Another valid ID is the Individual Tax Identification Number, or ITIN, and this can be verified using a card or letter as well. A less common ID would be the Adoption Tax Identification Number, or ATIN. Now remember, taxpayers who can't substantiate their identity are out of scope, and so we very politely refer them to a paid preparer.